Hello, everyone. Good afternoon. We'll start by calling our speakers to the stage. So may I call Mr. Fausto Parente, please? Françoise Gilles. Luca Filippone. And Ronnie Garreaud. And remotely we will have also Diana Radu and Bianca Adam. There they are. Thank you very much. I will make a brief introduction. My name is Tiago Alfaro. I'm an editor with Bloomberg News based in Milan. It's a pleasure to be here with all of you to have this discussion about the insurance sector. I would like to make a brief introduction of each speaker as well, and then we will get straight to our panelists to discuss PPPs and the topic we have today. So our panel will be about public-private partnerships and natural hazards, the way forward to close the protection gap. So in the next hour or so, our speakers will debate ways to reduce this protection gap along the lines envisioned by the G7 document through the development and dissemination of PPP schemes. So just to give a brief introduction of everyone, we have Fausto Parente here with us. He's the Executive Director of the European Insurance and Occupational Pensions Authority. Fausto was previously, among many other things, the Head of Supervisory Regulation and Policy Directorate at the Italian Insurance Supervisor. We also have Françoise Gilles with us. She is AXA's Group Chief Risk Officer and a member of the Management Committee. Françoise is an engineer and has over 25 years of experience in the insurance and banking sector across Europe and Asia. Luca Filippone here with us has spent over 15 years at AXA in senior roles and joined Reale Mutua as a Deputy Director in 2007. He became the group's general manager in 2015 and also serves in the ANIA Executive Committee. Ronnie Garreaud over there is the head of international risk coverage at Allianz Group and has been in the insurance industry for over 20 years. And finally, online, we have Diana Radu there on the right. She's the deputy head of unit on national fiscal frameworks and institutions at the European Commission in the Economic and Financial Affairs Director General. And then, last but not least, Bianca Adam. She's a senior financial sector specialist at the World Bank, where she's been leading work on disaster risk finance and working on a lot of projects with developing countries. So that's our panel. I'll go straight to our questions because we are running a little bit late, but that's a secret between us. We wanted to start talking about the local case and then expand from there to a broader discussion. So a question for Luca, to start with Italy. If we think globally, the average of natural catastrophe losses was growing around $30 billion in the 1970s, and right now it's around, in the 2020s, it's around $216 billion worldwide. Close collaboration between private and public stakeholders can help build an appropriate regulatory environment, raise awareness, and increase accessibility. But what is, in your view, Luca, the role of private insurance, and in particular of mutual insurance, like the company where you work, especially in the current Italian scenario?
Thank you, Tiago. Good afternoon to everybody. Yes, well, I think all the numbers we may see are saying that we have a huge urgency and we are in front of a very critical situation. And this is even more true in Italy, because Italy has a growing frequency of extreme natural events. And I may say, each and every report you may read about this topic always shows us that Italy is one of the most vulnerable countries in Europe concerning natural disasters. So if you don't like reading reports or if you don't like looking statistics, and this would be quite strange for insurers, just look around what happens. We had last year, 2023, l'annus horribilis, I would say, about the natural events in Italy, with 3 major events in the country. And one of them, the one in July, has been probably the biggest one in terms of Total insured damages, we are around 6 billion for the event in the north of Italy concerning rain and hail and big and strong winds. So there's no discussion about the fact we are in a country where we need to do something, and I am extremely positive about the first step that has been done by our government in the law, the budget law of 2024, giving this first mandatory for all companies concerning all the main perils like earthquake, floods, and landslides. I think it's a first step. We heard that also today. Many other steps may follow, and particularly the concept of household, but it's a very important first step, getting out from the logic of emergency and entering in a logic of a framework, public and private. And I have to say also thank you to ANIA and to our president and to Ivas also for the great push that has been done in those years to go and reach this kind of solutions. So as private sector, which are the things we bring to this public and private alliance, let's say? First of all, capacities. You know, it may sound common or easy or banale, we would say, but it's not, because we are facing a huge amount of risk, a huge amount of potential losses, and putting together the capacities of insurance and reinsurance world, private world, with public, it's a very important point. We're bringing expertise. No, we heard before that we have expertise about pricing, about claims handling, and this is an important point we can bring. We are bringing proximity, availability, consultancy with our networks. It's important. We are asking to have a greater literacy. I think our agents, for example, of Reale Mutua can be extremely important in explaining to people which are the risks, how they should afford them, and the relation of trust they have with clients and with the market are also extremely important in this topic. We are bringing speed. We said that during the morning. Speed is essential in terms of having a very quick capacity of giving a first partial or total indemnization to companies. If you remember, in the 90s, the government created a very important organization in Italy, La Protezione Civile, and this was because first aid for persons were very slow and not coordinated. And I think that Protezione Civile, who's a great excellence today in our country, saved a lot of personal lives. And I think that what we are building today will save a lot of companies' life, because being there quick, helping the entrepreneur to restart, it's one of the very, very important points. At last, I think we have to bring, as private sector, this constant push to adapt and to make the system evolve. Okay, it's the first step, but we already have to think about the evolution. Let's take an example, hail. Hail is what we call in our jargon of insurers a secondary peril, but it's not anymore a secondary peril. The effects of hail in Italy and also in France are extremely catastrophic. So we have to maintain the capacity of making this kind of perils evolve in the mutualization when they start to be catastrophic. A good example is Consorcio in Spain, where there is a constant discussion between CEOs of the private companies and El Consorcio, the public company, to look which are the new elements that have to be integrated in the system, which are the new events that are now catastrophic that we have to consider in the system. So I think this is some of the main contributions we can give as a private sector, and I'm really happy for the first step that my country did on this kind of public and private systems.
Thank you, Luca. And now, looking at the sector in a broader way, and perhaps a question for Fausto to start us with, do you agree that it is necessary in such a complex framework to move away from the logic of emergency interventions in order to tackle a delicate situation with realism and a sense of responsibility, which requires systemic alliances between all the parties that we have just mentioned?
Absolutely, yes. Yes, many times, yes. We have been working on this topic already since a while, but I maybe quote a couple of papers that we issued. One with the ECB in 2023, where we studied the effect of the national catastrophe on the GDP. And it's super clear that when there is no insurance coverage, the GDP drop much more and for longer than when there is an insurance coverage. And this is clearly an economic systemic risk that we need to face. And how to face, Luca already mentioned the public-private partnership is the solution in our view, provided that everything is, let's say, in the framework of reducing the risk. Because as was said by Luca, the insurer can actually mitigate the risk at the start, talking with people, incentivizing preventative measure, adaptation measure. This is the key component of any public and private partnership. Because all in all, the risk is there. We know that it will increase in terms of frequency, severity. We know that there is science around it, so no matter to still think about emergency or whatever. This is something, the reality we need to face. How to face? Reducing, mitigating the risk. And the public partnership, public-private partnership is the solution, provided that there is risk mitigants. And the recovery, when after the catastrophe, the recovery when there is an insurance coverage is quicker because of what Luca said, because insurance can help in reconstruction much, much more rapidly than a public intervention. This is absolutely key.
Thank you, Fausto. Françoise, do you want to add something to the debate?
Thanks a lot. Thank you, Tiago, and hi everyone. Happy to be with you. Absolutely, Tiago. I think this could be seen as a rhetoric question whether we need to build alliances to tackle this challenge. It's very clear. And if it was not from the start, I know that after the brilliant presentations this morning, everyone is convinced that we need to work together. If we try to solve it in silos, we are collectively hitting a wall. Now, concretely, what does that mean? Working together and building partnerships. It's very clear, and it was already repeated also this morning, we need to shift towards a focus on prevention. So when we talk about public-private partnerships, yes, there is also the way that we will share the losses, so partnership on money, but much more importantly, which partnership on information, call it risk expertise, call it insights. So beyond the financial compensations, how do we partner on information? We need consistent and determined partnerships on the long run. And because we cannot wait for long term, we also need short-term actions. I will not be too long. I'll just give two examples of partnerships on the long run and on the short run when it comes to sharing expertise, information. On the long run, between private sector and public sector, insurers don't have the silver bullet when it comes to addressing the resilience of societies to climate change. Having said that, managing natural catastrophe risk is something that the industry has been doing for decades. And because of that, the industry has a wealth of data, of modeling expertise, and of understanding that risk. With that expertise, as insurer, we want to share that information with our clients and with public authorities, for example, local public authorities, to include that in their construction rules. Very concretely, how are you allowed to build? where are you allowed to build? This is on the medium to long term. And another example of partnership on information on the short term, we're talking about anticipation of the natural catastrophe. And we were jokingly referring to when you've got an alert, you know, with the modeling, and I know we'll talk later about technology and artificial intelligence, which helps us to be sharper at foreseeing where and when and how severely a natural catastrophe will hit. While we know that, we need to partner to give that information to public authorities that can then share the alert with the population to protect people and assets. And apparently last night, there was a fire alarm going off during dinner. And it's true that even now when a fire alarm goes off, sometimes, you know, the reaction is not immediate. It's fair. However, can you picture yourself in a world where you did not have a fire alarm? It would still be a major difference. So I think on the short term, with the models that we have, providing that information to local authorities such that they can give the signal to the population when a natural catastrophe is going to hit, that's also a form of public-private partnership, which does not cost that much money and which can have a huge impact on the losses.
Thank you, Françoise. Thank you, Françoise. And indeed, you mentioned AI and some other tools that will be important for the sector to assess data and make it more relevant. We will speak about that as well in a little bit, but sticking to the current point that we have, I wanted to hear a bit more about it from Ronnie as well, and then we will pass to our speakers online as well.
Thank you, Tiago, and thank you very much for having me today. Very a pleasure to be on stage with ANIA and the association. Thank you very much. I mean, with all what has been said today, right, it's just a repetition of things, right? Because we said a lot of things already, which is absolutely true this morning in the panel discussion before what Françoise said and all panelists, right? I cannot just repeat, but for me there are two things I would like, or two or three things I would like to highlight. The first thing is that, yes, it makes sense that we join forces. Right? We join forces to tackle the climate-related events and the climate change, right? We are probably, from an insurance industry specialist, Françoise was mentioning this, in this topic because we are trying to have models, right, that are trying to assess not the if, but the when, the severity, the when, the where, and how severe a claims or a risk will occur, right? And I think in this regard, we can help, or we can bring our support to customers and to the public, right? To bring this experience and to help to manage this risk, right? But there is a thing, this is fundamental, and this is two things. First of all, the risk mitigation. The risk mitigation is key, and I will take a very, very basic example, right? I have two children, right? And for me, it was the first thing I tried to do when they were able to walk was to learn to bring them how we cross a street, right? And how to look at the cars on left and right, and then how they can cross the street. Okay, even worse, I'm in Germany, so we need to look at the green lights, red lights, etc. So a bit specific, it's not always the case in all countries, but this type of education, right, is super important. I know it is a very basic example, but it is something that needs to happen. We need to learn that maybe we cannot reconstruct the same building after a flood at the same level or at the same location, right? Maybe it's not possible without having another prevention, having a defense line or something that avoid a flood to come back again, right? We also these dramatic pictures of in Emilia-Romagna or in Germany a couple of years ago, etc. And then we should learn from that. We should learn how, together, also with governments and with public authority, to change the way things are rebuilt afterwards. Plus, we can also anticipate that, having risk mitigation actions and risk remediation or risk mitigation in a sense of, okay, to build for instance, building in a different way, right? And then to help with AI or with instruments, in fact, to better assess the risk. Where is the risk located? And then we can avoid that. The prevention also, I remember for Germany, we gave a call to we gave a signal to all our customers in the region of the R a couple of years ago, right? All of them have been warned. All of them, right? They were covered, but all of them have been warned. They were not there when the claims happened. They were not in the house, right? We sent the same message to the region, to the land, right? So I don't want to debate on what has been done with the information, right? But not everyone has been warned. But the information was there 3 hours before. The information was there that there is something that will happen, right? The second thing, and I will finish with that for this question, is that public-private partnership, yes, but there is no one-size-fits-all solution, right? So there is a different market, different maturity of markets, right? Different also experience in countries that maybe needs to be considered in the way we are shaping this partnership, right? And I can see totally differences in France, Italy, or in Germany, for instance, as an example. But what is clear is that everyone should play a role there, right? And I will finish with this, right? I was in Indonesia a couple of years ago. I was very impressed about the role that Allianz is playing locally to educate people on natural catastrophes and on risks, right? So really to make sure that our customers understand what is happening and why they need a cover, why they should not take this or this, etc. So I think there is a lot of things to do. Partnership, yes, but with a bit of, we need to think through how it works for which countries and which market.
Thank you, Ronnie. And now I will go on. We'll turn online, and I wanted to hear from Bianca on the same topic.
Thank you, Tiago, and hi everyone from Washington. I'll be brief and reiterate a lot of the messages that other colleagues have stated. I mean, it's just not sustainable to focus only on post-disaster emergency response and reconstruction. Ian earlier reminded us of the growing toll of NatCat losses, the humanitarian toll, the lives lost, and add to that the fact that a growing number of countries, especially developing countries, are dealing with increasing debt burdens. This means that policymakers have to juggle the difficult trade-off of protecting their people and economies from the crisis of today, while trying to invest for the future and to better prepare for the crisis of tomorrow. At the World Bank, we're a development institution. We invest billions of dollars in infrastructure development every year. Just last year, we invested close to $15 billion to support infrastructure in developing countries. And this is just a fraction of total infrastructure financing needs in the developing world. And what's important is that even if we do it right, even if we take risks into account and build in a resilient way, development creates new risks simply by adding more assets to the equation. So we must ensure that all new development is resilient and risk-informed, like as everybody else has rightly said, but also that we help our clients manage residual risk through financial resilience investments in disaster risk finance and insurance. And so for us at the World Bank, we've made this a priority, and we've increasingly shifted our focus from disaster response to prevention and preparedness. And the vast majority of our work on disaster risk management is now focused on ex-ante risk reduction, preparedness investment, and we have made financial preparedness, disaster risk finance, insurance a priority for our engagement. Just to give an example, I manage a $320 million facility that is dedicated solely to investing in risk finance and insurance solutions. But what I want to sort of reiterate is that there is still a lot to do, and Ian mentioned this in his introduction. The reality is that many governments face tight fiscal constraints and competing investment priorities, and they just struggle to prioritize ex-ante investments in financial preparedness and insurance. And instead, they often rely on ex-post support from humanitarian partners, development partners, donors. So there really is an important role to play for the international community, development partners such as the World Bank, UNDP, donors, the industry, to continue to promote proactive approaches to risk management through risk-informed development and through risk financing and insurance solutions.
Thank you, Bianca. And Diana, do you want to also contribute, please?
Yes, thank you very much, Tiago, and good afternoon to all participants. Thank you very much for the invitation. It is quite difficult to come last on this opening question, I would say, but I will try to make it a bit more, let's say, specific by giving some insights on how the state has fared as a risk manager across the EU member states. So a more, let's say, local perspective, but for that, I would say that I do agree that it's high time to move away from the emergency interventions, that we are very much used to that. And we have looked across the EU member states' practices and have seen that the most common way to deal with the cost of disasters in national budgets is ad hoc financing. And as Bianca mentioned earlier, this comes in a context where fiscal space is limited and there are all kinds of priorities emerging, current and future ones. Moreover, national budgets, we see that they are not really tailored to deal with the high costs related to disasters, because the tools that are used are either embedded in normal budgetary processes or the use of reallocation of funds that usually go to growth-enhancing projects, but in a case of disasters are reallocated to this more pressing funding need. What we also see across EU member states is that the processes around the management of the cost of disasters are fragmented, and that the information is very scattered across the national budgets or documents, but also across actors. So there are pockets of information set in various places. And as also mentioned earlier, work in silos is quite widespread. So this is a bit the state of play. At the same time, the exceptional events that are usually mentioned in this case do not look so exceptional anymore. So this calls for a reflection on how to manage this new normal. And for the states, for the member states of the EU, we have seen that they have fared relatively well when dealing with low-impact, high-frequency disasters, but the reflection is different if we are to consider high-impact, low-frequency events. And for this, we consider that national budgets should reflect better the potential cost of disasters and also the past cost of disasters. So from a fiscal perspective, one needs to know better what the public authorities, what public money has been spent to deal with the cost of disasters in the immediate aftermath and for reconstruction. And in this respect, at EU level, since April this year, so it's very recent, all EU member states are required to put in place national provisions to report, so to quantify and to report on the macro fiscal risks from climate change and from fiscal costs and on fiscal costs from disasters. So bridging this information gap that we also see at the public authorities level, at the national budget, we consider it very, very important. But I would join the speakers in saying that dealing with disasters is not one stakeholder's role, but this should be a joint effort, and one needs to see how that can be put into place while considering the very different perspectives of all. So on that, thanks.
Thank you, Diana. And to deepen a little bit one of the topics that we were just discussing now, when we think of PPPs and how can they respond to constrained government capacities and provide viable solutions to address the risk of natural catastrophes, to adequately address those risks. How can they do that exactly? This is something that we were just discussing now, but I think we can dwell a little bit more, and maybe we could start with Bianca on this one.
Thank you, Tiago. I mean, as you said, governments face a number of constraints, and when it comes to managing disaster risks, and our clients are developing country governments, and that's even more true in those circumstances. And while there is growing recognition of the need to invest in financial preparedness, many countries still face enormous challenges and protection gaps. I think about 10% of NatCat losses are covered by insurance in low and middle income countries. On the demand side, limited insurance coverage is often related to low awareness of cat risk, lack of financial literacy, and sometimes even mistrust in insurance products. Obviously, financial constraints of people and the government, and the expectation that governments or donors will come in after a disaster. And on the supply side, insurance markets in low-income countries are underdeveloped. Sometimes they just don't exist. And both insurance company and supervisory authorities tend to have limited capacity. So there are market imperfections, and these market imperfections justify policy interventions and public-private partnerships involving government, private sector players, regulators, development partners can play an important role in addressing both the supply side and the demand side constraints. Just to give you an example, one type of public-private partnership that we have seen yield good results in developing countries are regional catastrophe risk pools. So regional vehicles that help reduce market imperfection and transfer more risk to the market, offering insurance, often parametric, to governments to finance post-disaster emergency response, backed by international reinsurance and with financial contribution support from development partners like the World Bank and donors in the form of capitalization or premium subsidies. I'm sure people in the audience are probably familiar with examples such as the Caribbean Catastrophe Risk Insurance Facility or the African Risk Capacity, for example. And this is just one example. Beyond regional risk pools, public-private partnerships for insurance can take many forms. Including more basic, if you will, solutions where governments provide a form of insurance through social protection programs, for example. But ultimately, and I think Ronnie, I can't see the panel, so I don't know exactly who was speaking, but I think it was Ronnie earlier was mentioning that there is no one-size-fits-all public-private partnership for insurance. The shape it will take depends on the policy objectives of the government. Who are they trying to protect against what? And importantly, on the level of development of the financial sector, the insurance market, and the capacity of the government, both financial and institutional. So just to summarize, absolutely, public-private partnerships have an important role to play in helping address the demand side, supply side constraints, but they need to be adapted to the specific country context. And that's where partnering, not just on the instruments, but also upstream in terms of policy and public goods to support these types of partnerships is important, and where development partners and the industry can come together to do so.
Thank you, Bianca. Thank you. Fausto, do you want to contribute to this point?
Yeah, I mentioned already our paper with DCB, where we actually highlighted the possible design of such a PPP system, where each part needs to bear a bit of the cost of the damages for the society to be effective. And first layer of intervention, we called it ladder system, no? First layer of intervention is actually the primary insurer, what we mentioned already, how offer coverage that incentivize risk mitigation to people. This is the first line of intervention. Then we can use the reinsurance, the capital market, the kind of risk mitigation that is typical for the insurance sector. And ultimately, there will always be a level where where the private sector basically cannot be acting, because the risk, when it comes too systemic, too big, we need to build up a system, and here the public intervention come in. So designing the system is key in order to incentivize the risk mitigation and allow affordability of the prices. Because if we leave the private sector alone, in the long run, since the risk will increase, the prices will become unaffordable, and we don't solve the problem. This is the idea. I very much agree on what was said in terms of no one size fits all. But here we are also further developing some thinking, again, together with ECB, and let's hope that we will finalize another paper by this year, the end of this year, where we are exploring European-wide solution. Because what we have seen is that Italy is an example, but there are plenty of other examples in different countries. Each country is finding its own solution. Fine, everything is positive to the extent that we mitigate the risk. But why not thinking about a European-wide approach, where economy of scale, if you pool the risk across geography, perils, time, there can be economy of scales, there can be more risk diversification, and in the end, a mechanism that will stabilize over time the affordability of the coverage for people. Together with a kind of European-wide, I don't know, in this period it's difficult to talk about European fund public debt, but something can be developed in terms of supporting member states when there is a disaster, provided that the reconstruction is more resilient than what we have experienced. Too often we see, for example, politicians saying after a disaster, don't worry, we will rebuild everything as before. No, this is a time where we need to face reality. Maybe the reconstruction needs to be different. We need to work on the code for the building. We need to work on mitigating the risk for the future. Otherwise, in the long run, everything will be unaffordable.
Thank you. Françoise?
Thanks, Tiago. Yes, I would like to echo Fausto's point indeed on the 3 layers of protection: insurance, reinsurance, and then state, with the importance of maintaining the signal of the cost of risk throughout the chain. We need to make sure that while there is transitional support, there is also a lot of information which is shared through the price of the coverage. And if somehow at the end of the chain there is no transmission of at least part of the cost of risk, then that's a danger to making the system unsustainable. I would also like to echo Bianca's great point and the reference to parametric insurance as possible solutions, referring to the issue of the protection gap. If we look at the NatCat losses over the past few years, there's a huge gap, particularly in developing economies, as Jan also shared, between the insured losses and the economic losses. Ronnie, you touched upon one important solution, which is medium-term to long-term, raising awareness through education and through financial literacy. This is one thing definitely to invest in. But there are mechanisms such as parametric insurance. You might recall a terrible earthquake that occurred in Morocco last year in 23. Huge protection gap there as well. We had a coverage in place with the local municipalities. Parametric insurance, fast payout. Simply based on the severity of the earthquake, the payout is sent to the municipality. On traditional insurance, on the same area, and the same for us as for the industry, but on those products, 1 year later, we are still in the damage assessment phase. And those populations need the payout very fast. So I think parametric insurance is a way in the meantime, to bridge the gap of financial illiteracy, because the individual people of the population might not buy the insurance. However, the local authorities might reach out to get that collective insurance through parametric insurance, and that helps a way forward.
Thank you, Françoise. Thank you, Françoise. And Ronnie, I don't know if you want to add a few more points here.
Yes, thank you, Françoise. I fully agree. This is a short, mid, and long-term strategy that needs to be developed with all the stakeholders, right? And what is for me clear is that we cannot come into a solution where, in fact, it's just about a cost transfer from, let's call it from public to private sector, right? I hope that we all agree that it cannot be the case. We also need to consider the capacity of the market, of the insurance private sector, right? And the risk appetite of each, right? Because Françoise was mentioning we cannot come into a solution where things are not sustainable for private insurers. I think this is absolutely key, right? So the different actors and stakeholders and on the private insurance sector will have to look at what is their own capacity, right? And they cannot be forced to take over capacity that in fact would lead to maybe a solvency issue on a long term, or even financial losses that is probably potentially not affordable for them. Means that the public authorities need to keep a role, and I called it, for me, the skin in the game. So everyone needs to keep a skin in the game, right? And I think it's not just public or just private, it's everyone. Also the customers, at the end of the day, needs to have a skin in the game, right? Needs to understand why it cannot be a blanket cover, right? That people are just blindly having, and then they can do whatever they want. They also need to understand that their cover is, yes, a bit costly, maybe, but not that much, but they need also to do some effort to mitigate the risk on their end, right? So that is something which is important. And again, I think public-private partnerships, so PPP, can take really a different shape, right? We can have some overall high-level, I would say, definition of it, and I think the paper of the G7 is a good foundation for that. But we need to look at really a market specificity where maybe also capacities are already enough in some markets where a PPP is not already needed, but at least there is a close collaboration that is needed to discuss and to say, okay, and to adapt depending on the market.
Thank you, Ronnie. Thank you, Ronnie. And I think we will stick with you to the next point or to the next topic, which we wanted to know, in your experience, how can we ensure that the creation of well-functioning frameworks for the public-private collaboration can be ensured?
Yes, so I was thinking about that, and in fact, I would divide it in 4 elements I would like to further develop. The first one is probably the objectives, right? To be clear on the objectives of the partnership, right? So to avoid any arbitrage, to avoid any trade-offs, right? To be clear on the structure, to be clear on maybe how to foster risk prevention, risk reduction, but also to be clear on which broader coverage is about, right? Which hazard, which perils are covered by these objectives. The second is probably the scope, right? So the scope in the sense of we could think about covering only a certain part of the populations or businesses, right? And only for residual risks, for instance, right? So we don't need to cover everyone at the same time. So maybe we can adapt solutions and partnership to target some part of the population that maybe cannot afford insurance, right, cover, or at least to be clear on this scope, right, and also be clear on the hazards and the perils, right. I think in the previous panel, we discussed about that already, right, to be very clear on what is covered and what is not covered, in fact. The third, which is probably a very complex one, this is the design features of the partnership. right? I was mentioning a few topics before, right? Like no full cost transfer from public to the private insurers, but it's not just that, right? It's what are we talking about? Are we talking about a pool, about co-insurance? Are we talking about a public sector just being a kind of reinsurer of the insurers, right? Insurers taking the whole, and in which forms, right? This needs to be risk-based pricing, right? I know there's a lot of discussion also in Italy, right, on this topic. I fundamentally believe that a risk-based pricing is key, right? Otherwise, there will be on the mid-term an issue with the scheme, right? The partnership will be probably have a financial difficulty and will need to be refunded in a way or the other, right? But okay, everyone will make his experience with that, probably. The risk sharing is super important, right? And everyone should keep the role, right? I can see governments, right, having a clear role in the education, in the campaign, maybe in making sure that communities are becoming more and more resilient, right? I just mentioned a few things. One thing, in Germany currently, every 3 months now, we have a kind of alert on the countrywide, right, to test whether the system, because the horn, has been deconstructed after the Second World War, okay? So, and then realize that there is no way to inform population if something big happens, right? Okay, so they rebuilt with an app, right, which is good, which is now working. And they are testing and informing the population via different media, right? And testing that it works. And in reality, everything is prepared for the preparedness, because it's all about preparedness, to inform the population. I think the government can play a role there on this thing. And the last thing I wanted to highlight is maybe it's because I'm part of a German insurance group, right? So we think as engineers most of the time, right? That's implementation and execution, right? So implementation, so effective coordination of all stakeholders, right? This is easy to say, it's super complex. Designing of a governance that works, right, for the scheme, that everyone knows what happens, what is to do, etc., what the roles of each, right? The expertise, to grow in the expertise, and probably to review the scheme on a regular basis to see whether there is a way to improve it, right? Foster the use of technology, right? We know AI can play a role, but not just, but it is important. Geocoding, data, etc., can really help. And last but not least, of course, I think I didn't mention that so far, but really insurance supervisors, right, can play a huge role in orienting or putting some context and some rules around all these schemes, I think.
Thank you, Ronnie. And I would like to also hear from Diana on this topic and your experience.
Yes, sure. So for me, in my view, even before thinking about PPPs, one should reflect about the issues that such arrangements should address. So for this, I think one could start with taking stock of the situation and understanding what can be done better or what can be done more efficiently. So I'll give you the perspective from the public sector, and where we have looked at how to better manage the fiscal risks from disasters, not only by managing them precisely, but also by promoting risk reduction, because it's another way to reduce such costs, not only for the public actors, but also for the private ones. So I think working on risk reduction is a way also of alleviating the pressures for other solutions going forward. But going back to stock taking, we have reflected and devised a structured approach to disaster risk financing for public authorities. Such an approach, we see it under 4 pillars, with a clear with the various elements brought together by type of activity or by stakeholder involved in the management of the cost of disasters. So we see that first building on data, so data availability on the past costs, so knowing how much have you spent for disasters and how much can you spend, can you expect going forward to be covered by you as an actor. I mean, now I'm talking from the public sector side, but that can also be thought from other stakeholders' views. So this is the first pillar. It is forward-looking and backward-looking. The second pillar is related to private disaster insurance, because one cannot think about dealing with the cost of disasters in isolation. So we think that it is important to take stock of the situation, of the insurance coverage and penetration, and the drivers of that state of play. At the EU level, there is a large heterogeneity of situations. Such insurance penetration can be very low or very high, irrespective of, I don't know, let's say the occurrence of disasters. So one would need to understand which are the drivers of the insurance protection gap. Is it availability? Is it affordability? Is it regulatory or other explanation? So in order to maybe play on some of these drivers and try to reduce that. The third pillar for us, in our view, is to look at the state as a disaster risk owner, because the state often acts as insurer of last resort, as I said, and it's not a very good manager. It deals with such costs in an ad hoc manner, which is clearly suboptimal. So one needs to take stock of that, how much the state spends for the cost of disasters, what tools does the national budget use, how are public assets managed. This is a huge contingent liability in case of disaster. So are such assets insured, or how does that happen for when it comes to reconstruction or recovery actions? And then also access to compensation from public funds. We consider that clear rules for accessing such funds are necessary, and that in a more developed situation, or let's say a fine-tuned one, there could be conditional access to funds depending on previous measures to insure oneself or to take measures to reduce the exposure or to adapt to a particular risk. And as Ronnie mentioned also, governance arrangements are also very important. How the leadership is managed, who has what role in the whole process, and do we learn also from past lessons? I think I would like to end my point with that, yeah, thanks for the question.
Thank you, Diana. And before we move to the next question, I just wanted to say that Mr. Luca had to leave earlier, and he asked me to apologize on his behalf, but he had a commitment and he had to go, and he was very thankful for the very fruitful conversation that we are having. Unfortunately, this conversation is running a little bit late now, so I'm going to ask other speakers to be a bit brief in the next questions, and I would like to take us directly to the topic of technological innovation, and maybe a question for Françoise. We were talking before, Françoise, you even mentioned that tech innovation is key to supporting insurers in refining data accuracy and data analysis and everything related to data. A hot topic right now in insurance, and not just in insurance, everywhere, is AI as well. So I guess my question is, how can artificial intelligence play a role in reducing this protection gap that we are debating?
Thanks a lot, Tiago. And let me try to help you with time, and apologies for having been too long in my previous answers. So I will just mention one example, because as you can imagine, AI is part of our day-to-day today, all along the value chain. AI is particularly good with image and text. And when AI is really good for image, I'll give the example of real-time scanning. That means that we are alerted real-time through images of the potential, take the wildfire peril, we are alerted of the start of a peril. Through AI, we are also able to have more sophisticated predictions of the trajectories of natural perils. And so as soon, because in that area, time is of the essence. So this is one illustration of where clearly technology can help us move faster.
Thank you very much. Thank you very much, Françoise. And now, to conclude our conversation, one broader question where I hope that each of us can bring a personal touch and a personal view into the conversation that we are having. So a question for all the panel, really. PPPs should obviously also promote the adoption of preventive measures, a topic that has been recurrent in our conversation right now. It's not to react, it's to prevent against catastrophic risks, and this would help relieve the burden both on the public side and also on the private side on the matter of financial resources. How should these measures really be implemented? And maybe we can start with Bianca on this one.
Thank you, Tiago. I think the short answer is that financial protection or financial preparedness solution must complement investments, adaptation, and resilience. And they're two sides of the same coin. As we discussed earlier, without adequate risk reduction investments, risks will continue to increase and will make insurance and other risk finance solutions unaffordable. And we're seeing this happen already in many parts of the world. Risk finance and risk reduction investments should be designed to be consistent, integrated, and risk-based pricing, for example, is very important in signaling and creating incentives for prevention. So how do you do this in practice? On the government side, and coming from the perspective of developing country governments, I think the key is taking a whole of government approach to building resilience. That is, this is not just a question for the Ministry of Finance, even though the Ministry of Finance plays a very important role, or for the Civil Protection Agency, for example. It requires concerted efforts across line agencies, line ministries, but also across different levels of government, because risk ownership lays for parts of the government, from local municipalities to fiscal decision makers. And in a way, what we're talking about, if you will, is enterprise risk management for governments. And we're seeing this happen in more advanced economies, and Diana was mentioning some of this work, and I would be interested to hear the EU perspective on this. But for example, New Zealand is a good example of a country that's taking a whole of government approach to risk management. But also in some low and middle income countries where fiscal risk management units in ministries of finance are increasingly trying to drive resilience planning from a fiscal risk lens. And on the industry side, insurance has a huge role to play in driving risk management standards throughout society. Françoise earlier was mentioning fire alarms, but also building codes, requirements for operations and maintenance spending, risk engineering. So there is a need for partnership across public and private sector, not just on the instruments themselves and on the PPPs, but also on the bigger picture to drive key reforms. And I'll end by saying that I think there's a lot to offer. The industry has a lot to offer beyond financing and products, and therefore it's important to continue this conversation as we move forward. Thank you.
Thank you, Bianca. Fausto, do you want to also?
Yes. But I think each of us has to do its own part, basically. Starting by industry, as we said, they need to engage with the client to explain mitigation of risk and incentivize good behavior with maybe prices, discount, or whatever. The government needs to engage with the private sector, actually, to find solutions. Insurers also need to share data on the benefit of preventative measure. Sharing data is key. It was mentioned already, because I think trust needs to be built up between all the different parties, and only sharing data and analysis can help in this regard. And then people also need to be more aware of the risk. It was mentioned already, according to the studies, the low take-up of insurance coverage is based first on the misperception of the risk, on the expectation that state will intervene anyway, on the fact that they believe the price is much higher than, Florence this morning mentioned the price in France. So there is a misunderstanding and misperception. We need to work on education together, but also the citizen needs to, let's say, realize and face the risk. And then, of course, the supervisor needs to do his job. It was mentioned. I think that EIOPA, at least I believe that EIOPA is doing what we can. First, raising awareness. The NatCat dashboard, which is on our website, per peril, per country, clearly show the protection gap around Europe. We have on our website, we have an app, Climata app, that helps the small insurers to find the data to measure the risk, because not always the data and modeling are available in each and every insurance company, especially the less, let's say, the smaller one. We have been working on the risk preventative, what we call the impact underwriting, how the insurer can incentivize mitigating the risk since the start, since when they offer the coverage. And also we have worked on the demand side. It was mentioned why people do not take up the coverage. Instructing people, allowing education, and working together is the only answer. So each of us needs to do its own part, and I do hope that EIOPA is doing it.
I hope so too. Françoise?
Thanks, Tiago. Really, not much to add. Just to echo, we really need to build partnerships not only around financial compensation, which is also important, but now much more partnerships on information, risk understanding, such that we can prevent the catastrophes.
Thank you very much. If anyone else has any last remark, we have a few minutes. Otherwise, we will just conclude now. Thank you very much, everyone. Have a good afternoon.